I'm already swiveling. Everybody, I would like to introduce you and thank you very much for coming to. You all right?
Yeah, I'm great.
Good.
You?
I'm fine.
Good.
Yeah, Aaron Levie, co-founder and CEO of Box, the cloud-based storage company. Aaron, you guys made two announcements this morning.
So that was the BuzzFeed corner, and this is the enterprise corner?
That's exactly what it is.
Okay.
Consumer, enterprise, consumer, enterprise.
Okay.
So you guys made two announcements this morning. One was an integration with Microsoft 365. One was that you were uncapping storage limits for your business customers. Let's start with Microsoft first. You historically have said some not the most positive things about Microsoft as a company. You've talked a little bit about how you've got Apple devices and use Apple software and more, and so do most of your customers. So why team with a company that you seem to at least think is on the decline?
Is Satya still here?
Satya is not still
got
here.
it. Okay.
No one can hear this except the people in the room and anyone watching on video.
This is not going on the internet. No, so I think that if you look at our strategy, it's actually been very consistent with and commensurate with where the market has been. So if you look at the Microsoft in the 2000s, they were very much a closed-off ecosystem. They didn't really have an open platform approach. They were more known for, kind of the strategy of the 90s that kept going through the 2000s, which was own everything, control everything, and make sure to shut off the competition. And so we built our product for a very different kind of world, a mobile, cloud, heterogeneous, best-of-breed kind of world. And that meant, by definition, that you're going to go up against Microsoft and try and tell a very different kind of story. But now we're seeing a different Microsoft, and customers are seeing a different Microsoft. You're seeing a much more open, you're seeing a Microsoft that is clearly multi-platform, becoming very platform agnostic, and that requires a different approach from us as well.
Are you personally starting to use Microsoft products, either hardware or software?
So I actually have, I've been on Windows 7 for many years now. That is my PC at work. Then I use a Mac Air, and I have an iPhone, and there's a little Windows 8 phone off in the corner.
And you guys also do some work with Apple too, as well, correct?
Yes. We do a little bit of work there. Apple equally. I mean, you saw the announcement today with IBM.
Yeah.
So they're very significantly, going into the enterprise. They're doing that through partnerships. They're doing that at a technology level. I mean, the little-known secret with Apple is it's actually probably the most secure operating system for mobile devices and even computers. So if you think about, let's say you're an enterprise like a GE and you have tens of thousands of iPads and iPhones in your enterprise, you're going to be able to scale that in a lot of a better way than some of the other platforms.
Let's talk about this other thing. You uncapped for business users, already large enterprise users. You had already uncapped storage for. You haven't done. I'm just curious. Obviously, you're an enterprise-focused company. If I'm just an individual user of Boxo, am I uncapped?
You are not uncapped unless you want to pay us.
Will I be? Is that because you said today in your blog post announcing this said end of the storage war, suggesting this is where it was going for everybody. So is that just a matter of time?
Well, it's a matter of time for probably other players, but because we're more focused on the enterprise, what we announced today was that businesses now had no limits on the amount of storage that they could put in the cloud with Box. On the consumer side, I think that you would more expect to see that from Apple, from Google, from Microsoft, from some of the other players, as opposed to us directly.
When you say the end of the storage wars, the subtext there is that storage itself, just the pure storage, has become commoditized, and what you guys try to do is build stuff on top of that storage, and that's where you make your money. I'm curious, those things on top, are some of those soon going to be commoditized? In other words, and if so, what are those things on top that you're currently making money off of, which soon you won't?
Well, I'd actually argue that storage has always been a commodity. When we got into this business 10 years ago, everyone said storage is going to be a commodity. How are you going to differentiate? And we said, well, we're not really building a storage company. We're building a company that lets you do new and different things with your information, whether that's mobile access, whether that's being able to collaborate around your content. That was why we started the company. So it's not particularly news to us. It's just the amount of storage today that we can give customers is far larger and much more significant than we could previously. So just as an example, so we obviously talk mostly about Moore's Law in the tech industry, which is obviously responsible for why we can have such, I think, amazing technology in smart devices and iPhones and iPads and Android phones and all of the handheld computing that we have. But the thing that we don't talk about as much is the same efficiency trends happening in the storage technology. And this is the reason why YouTube can store all of the world's videos, why Wikipedia has no limits to the amount of encyclopedic content that it can create and store. This is why Gmail can give you effectively unlimited email storage. So that same trend has led to a 22,000x improvement in the cost of storage over the past 2 decades. So, our friends at Western Digital and Seagate, just every single year, they produce a better hard drive that can store more data. And instead of us, just keeping that as an advantage for us, we give that back to customers by giving them more space over time. And so we're finally at that point.
Had you always expected you were going to do this, or is this partially a reaction to what Google and others have done to make things cheaper?
I think if you were just to run this out on an Excel spreadsheet, you would very quickly get to the point where you should have an arbitrarily large amount of data that you can store in the cloud, and that really isn't the differentiation. So what we have focused on since we started the company 9.5 years ago is how do you add all of that value on top of the storage? So once you solve the ability to store files, then all of your time goes into how do you search, how do you collaborate, how do you enable new kinds of workflows to happen with your content. And that begins to show up very differently, whether you're in the healthcare industry, in financial services, in pharma, and media entertainment, which is really where our strategy has been now for a number of years.
Storage doesn't seem to be like a winner-take-all market, but I'm curious, is it a winner-take-customer market? In other words, on the enterprise side, if the customer goes with Box, from your perspective, are they going to go with Box? Or could you see there's an enterprise customer who will go with you, who might choose the thing Amazon's coming out with, might choose they want to do Dropbox for part of their business?
Yeah.
Or do you feel it's, we get the customer, it's all Box, or it's all somebody else?
It's certainly winner take most of the enterprise in terms of there's going to be some core horizontal use cases in a large enterprise, and that's the ability to access your files from anywhere. That's the ability to share with anyone. And then there's going to be a range of solutions that might go deeper into one specific business problem that enterprise or that industry has. And then there might be different tools that employees also bring in. So we're very much moving to a heterogeneous world, even when it comes to cloud, file sharing, and content management platforms. But what is true of our business and our market is CIOs and enterprises are going to probably sanction one solution as the corporate standard for that broad set of horizontal capabilities. But you're still going to see enterprises use different solutions in that mix as well.
Are you, you've talked about kind of moving internationally, expanding better into regulated markets. I'm curious, where do you think right now, you're within the broad enterprise sphere, where are you particularly strong now, and where do you, let's not say weaker, must you get stronger soon?
Yeah, so we are I would like to say we're big in Japan. We're getting bigger in Japan. So I can't quite put that sentence together, but so we just made our Japan announcement about a month ago. We have about 100 people in Europe. So
how many on the ground in Japan?
There's a whopping 14, maybe.
14.
So just changing all of Japan right now, and so, but that's going to be a massive market, obviously a huge market for the Salesforces of the world. They've been big early adopters of cloud computing. So we're going to have an international presence in most of the major kind of markets that you'd expect for kind of large enterprise IT spend and large enterprise problems. But we are already a global business because inherent in the way that customers use our product, they have to be able to share and collaborate with all of their partners, all of their vendors, all of their contractors, all of their subsidiaries. And so when you think about a GE or a Toyota or a Procter & Gamble, their business is global by definition.
Yep.
And so that ability to share information on a global basis has been one of their core requirements for Box since day one.
Gartner recently came out with its first kind of Magic Quadrant that dealt with your space, and they were very.
We are really on the enterprise panel right now.
Okay, yeah, we are. They were very, very complimentary towards you.
Gartner
except
Magic Quadrants. Yeah.
One of the only real caution they said for you guys.
Is that the first time this has ever happened at a Fortune event?
It's the first time I've ever said the word Magic Quadrant in my life.
Okay, how'd it go?
I think it's good. Do you think it
I
went
thought it
well?
went well.
They talked about the fact that you guys are only public cloud, that you guys don't have kind of a hybrid private model. Is that something you think you need? Do you agree with them? Do you need to move toward that to get into a better quadrant?
Oh, well, we're in the best quadrant.
I know you are. To get better, to move even higher.
There's only 4 quadrants. We're in the best one. So
yes,
we're not going to be able to create a fifth on this one. But so we are the sort of only cloud provider in the leader quadrant. Now, just to get really specific on how Magic Quadrants work, but I think that there was some emphasis on being a hybrid model, right. Which we don't do because we think that when you enable a mobile, collaborative, distributed enterprise, it's far easier to do that when you have all of that technology delivered over the cloud and have us manage that technology. But I don't think we're ruling out any long-term approach to how we deliver our technology. There'll be different industries, there'll be different use cases that we want to go solve for, and over time we will certainly adapt to the needs of our customers.
Let me ask, so when you woke up on the morning of March 23rd, you were a Silicon Valley rock star CEO type person. Everyone thought, wow, Aaron Levy. He runs Box. Box is this company, this juggernaut, et cetera. And then you guys filed.
That's not how I thought of it, but great.
Okay, but I think that's how you were in that group. And then you guys filed for, and then you were slobbered over by the tech press, and then you filed for your IPO, and that same tech press kind of turned against you very, very quickly, kind of overnight. So let me ask this:
that happens to rock stars, doesn't it?
I don't think it's quite as quick.
Okay,
you have to do something.
Okay.
You have to kill someone or something.
Oh,
you
wow.
didn't do that.
Okay, no.
So I'm wondering, how is it for you as a CEO to go from, at least it seems, kind of constantly patted on the back to everybody saying, wow, his business is awful?
Is that what they said?
I think they said that.
So my PR team didn't forward me those.
I think that was the subtext. It might not have been as explicit.
Here's this blog. It's in an emerging market. You've never heard of this blog before, but they said great things. So I
think that might have been the deck in the journal, but I could be wrong.
Oh, got it. That's your competitive battle, not mine.
Yeah,
so I think we well, first of all, I mean, for 9.5 years, I think there's been a general misunderstanding, which we're actually fine with because customers at the end of the day need to store their files. But there's been a misunderstanding about the model, which is that this is a company that sells storage. We actually buy storage, and what we do is we sell content and collaboration software on top of that and a platform on top of that. And so, first of all, we had to do a better job of, I think, educating and kind of making sure that positioning was clear. As it relates to the specific sort of March time,
and also in how you deal with your employees, right? Because they come in and it's, I would assume, it's hard for employees to read negative things about their employer each day when they come into work, or at least for a couple of days when they come.
Like every third day, more like it. But I think that we happen to. So this is all off the record, right? I think this is how this works.
I'm sure that's not at all what we said. Yep.
Okay, got it. So maybe just don't tweet for this portion of the conversation. No, so I mean, we certainly filed at a time where one was right the moment before I think we saw a bit of a sort of high growth tech sort of public market correction.
Yeah.
So just in terms of best practices of when to file to go public, that's not one of them. And you couldn't have known. And then the other element was if you look at the sort of S1 itself, it was over last year, which happened to be a year of very high growth and very high investment in the future of our business. And that didn't tell exactly the best story probably from what's the leverage that you get with a recurring revenue model at scale, and how over time does that become more efficient, and how do you get more leverage from the customers that you're signing on. So we kind of got 2 knocks on that, and right now we're in a period of executing through that. And I think there's hopefully a slightly better kind of more clear understanding emerging right now.
By the time you guys filed the S1, you obviously you didn't know your complete Q1 numbers, but you had a sense of them, I assume, by then. Was that a conversation at all? You know what, let's wait 5 weeks until we can get the Q1 numbers in there when that's our first public unveiling to the world?
Well, I mean, again, the nature of a SaaS or kind of cloud recurring revenue business is actually you generally always have a lot of predictability much farther out than even the quarter that you're in. So we generally knew the trajectory and the trends of the business. We made a decision that coming into this year, we both had the operational capability, we had the execution, and we had the predictability from a business model standpoint that made sense to go public. And at the time that we filed, the market also was, I think, quite a strong environment. Unfortunately, one of those variables changed, and I don't think we anticipated some of the challenge of telling the story on the numbers that we had from last year.
Then about maybe a week ago, 2 weeks ago, I guess almost at this point, you guys raised more private funding, really arguably private equity more than venture, $150 million from TPG and Co2. It seems to be at relatively punitive terms. There's ratchets in there. There's some anti-dilutive things in there. Why did you decide to raise more private money? You guys, it seems at least, had cash that so long as you went public by year end, it's not like you were running out of money. Why do this deal?
No, I think that actually I would say they're pretty attractive terms. I think that it gives us $150 million. We now have over $200 million in the bank. Gives us a lot more control of waiting for this market to sort of evolve through the period that it's in. And you obviously new investors coming on board want to ensure that they're going to be able to participate in the IPO in a way that's sort of strong for their investment. So if you factor in all of those variables, it was actually I think a strong kind of round.
I'm curious, if the market hadn't turned, as you said, you guys file the market outside of you, the macro kind of SaaS market, the valuations got slashed, et cetera. Is this a round, I guess I'll ask it this way, when did you start looking for this round or talking to people about that round?
Unfortunately, I can't really talk about that, but I think we had some, I think, positive inbound interest through the time frame where things were getting very volatile. And we decided if we can continue to invest in the business and continue to focus on the growth that we were focused on and not have to worry about all of the sort of volatility going on in the market, that would produce I think a really strong outcome for the business.
We have a few minutes for questions. If people have them.
Particularly about like the storage industry is more fun.
We got one right here. The mic's coming for you.
Hey, Aaron.
Yes.
Can you speak a little bit about the future of your business, winners and losers, 5 years out, defensibility of Box?
Thank you. That you didn't seem to fit an IPO into that. Are you sure you asked the question the right way?
I see two.
So I think what's happening is we are in this point of transformation and transition where hundreds of billions of dollars of spend in software, hardware, infrastructure, technology on the enterprise side is migrating to the cloud. And it's migrating to companies like Workday, to Salesforce, to Google Apps, to Office 365. And we're at this transition period where the IT model of large enterprises is changing pretty radically. And our job is to go build the platform for how businesses are going to use their content in those enterprise environments. And in healthcare, that's going to mean how do you collaborate around medical images. And in media entertainment, it's going to be how do you collaborate around a video. And in law firms, it's going to be how do you do contract management in the cloud. And as you make this transition, larger and larger enterprises are making this change. It's beginning to rework entire business models of these companies. It's beginning to rework entire business processes of these large enterprises. And so we want to be the platform for how businesses work with their content. And whether that's working with it in Office 365, which is the integration that we announced this morning, or within Salesforce, building your own application, or doing it directly within Box, that's our focus. But I think the key window of opportunity and the key moment that is happening in this market, and it's benefiting effectively any kind of cloud or SaaS or enterprise-focused company, is the world of enterprise technology is changing. The world for our collective enterprise customers is changing, and it's requiring businesses in every industry to just retool how they do IT and how they deliver technology to their employees and within their business.
Two quick final questions. Yes. One, you are probably the most entertaining CEO tweeter that exists. Do you write all your own tweets?
That
is a lot of words for.
Yeah. So I basically write the tweets. Yes.
Basically write the tweets.
Yes. It's just weird. Like, yes, obviously I write the tweets. It's Twitter.
I don't know. I'm just asking.
So yes.
Andrew Mason didn't. That's why I'm asking.
Oh, I didn't know that.
Yeah, he had a writer. Final quick question for you. You own a little bit less than 6% of Box. I'm curious. Do you expect, assuming there is an IPO, assuming the company's still doing well, et cetera, do you expect to be CEO of the company in 5 years? If they want you to be the CEO, the board, et cetera.
I think I'm here for decades. So wait, why is that laughing? Mike, come on, what are you talking about? Who laughed? Okay, no, there are very few platforms that I think are going to emerge in the next couple of years that redefine how enterprise computing works. We want to be one of those. Now, the jury's out if we can become one of those, but that's the goal. And if we can, then this is what I'd like to personally be doing for in perpetuity.
Fantastic. Well, hey, I really appreciate it. Thanks for coming.
Great, thank you.
Thanks, Aaron.